In this video we are going to talk about monthly dividend stocks. So before starting this video, please like this video and subscribe to this channel for our future updates. Because of the recent volatility on Wall Street, a large number of investors are taking a risk-off approach with their portfolios. That frequently entails pursuing dividend stocks, both for the comfort of receiving regular dividends and for the more fundamental reason that a stock must be comfortably profitable in order to provide constant distributions to its investors. In order to lessen your worry, try investing in one of the 7 monthly dividend stocks listed below, which have demonstrated their dependability by making profit-sharing payments every 30 days for the past 7 years. They, like all stocks, will experience short-term volatility, but if you stick with them over the long haul, you will be able to reap dividends that are at least 4 times greater than the typical S&P Wink with tongue sticking out 500 dividend stock by 2022. Number 7. Armour Residential REIT Inc, ticker ARR. Armour has been struck particularly hard by the current market volatility, as have many other equities in the market. However, it has continued to pay its 10-cent monthly dividend on a consistent basis, and at the current price, it offers an absolutely incredible yield. Despite the fact that Armour is constituted as a REIT, or real estate investment trust, the company does not own any physical properties and instead invests in residential mortgage-backed securities. It functions more like a financial stock, and because it borrows funds to support these acquisitions of mortgage-backed securities, it may be more vulnerable to rising interest rates than other types of assets. However, ARR's stock price has clearly reflected these difficulties in recent months, and even while shares may struggle to regain their previous highs from a year or two ago, the monthly payouts should be more than enough to keep you satisfied as a shareholder. Number 6. Dynex Capital Inc, DX. If you enjoy double-digit yields in mortgage-related REITs, but are concerned about the volatility of annualized return on investment, ARR, Dynex is a good alternative. So far in 2022, shares have fallen, although they have fallen less than the broader S&P Wink with tongue sticking out 500 index, according to this writing. Furthermore, DX invests a significant portion of its capital in mortgage-related securities, which include government-guaranteed loans through Fannie Mae and Freddie Mac, in order to provide a small amount of risk mitigation for its portfolio. While stocks haven't exactly been soaring like gangbusters in recent months, they have been pretty stable. That is likely due in part to the fact that it is regarded as a safe haven investment by dividend-oriented investors, given its consistent and significant dividend payouts. Number 5. EPR Properties, EPR. As we move on to real estate investment trusts that own actual properties, EPR is a commercial real estate company that owns stakes in entertainment-oriented facilities such as movie theaters, ski resorts, casinos, and other types of experiential properties in 44 states, among other things. This is an excellent business strategy at the moment, given that the American population is returning to travel after suffering from cabin fever as a result of the coronavirus. These residential homes are also well protected against geopolitical turmoil in Eastern Europe as well as rising energy prices. It may take a tank of petrol to get there, but driving to a resort rather than flying across the nation is far more cost-effective when oil is more than $100 a barrel. This monthly dividend stock only recently resumed its payouts in 2021 after being halted due to pandemic-related difficulties, but its 27.5-cent monthly payout adds up to a substantial yield that makes it a compelling investment opportunity. Number 4. Gladstone Capital Corporation, GLAD. Founded in 2007, Gladstone Capital is a financial firm that operates in a similar manner to a venture capital fund or private equity firm, searching for attractive investments in other firms and then distributing the earnings from those investments to shareholders. It specializes in finance and equity investments in small and mid-sized businesses, providing loans ranging from $7 million to $30 million with durations of up to 7 years to qualified borrowers. Among the companies in which it currently has investment shares are food producers, chemical manufacturers, real estate companies, and small technological organizations, to name a few. A well-diversified debt portfolio that generates regular monthly payments as a result of this strategy is produced. Number 3. Main Street Capital Corporation, Main. A major investment firm established in Houston, Texas, Main Street Financing Corporation, NYSE, Maine, is a principal investment firm that provides long-term debt and equity capital to lower middle-market companies and debt capital to medium-market companies. Management buyouts, recapitalizations, expansion financings, refinancing, and acquisitions of companies operating in a variety of industry sectors are among the most common uses of Main Street's portfolio investment dollars. Entrepreneurs, business owners, and management teams are encouraged to join forces with Main Street, which strives to provide one-stop financing choices for its businesses in its lower middle market portfolio. Lower middle market enterprises on Main Street typically have annual revenues ranging between $10 million and $150 million. It is another stock that pays a monthly dividend in the financial sector. Mid-size companies that are too large to obtain a loan from a local bank, but too tiny to attract the attention of huge Wall Street financial services organizations receive financing from Main through debt offerings and direct interests in the company, among other methods. Since the beginning of the year, Main has outperformed the S&P Wink with tongue sticking out 500 by a little margin, thanks in part to its high-quality portfolio. However, the true attraction of this stock is its 21.5-cent monthly dividend, which adds up to a large yield for investors who buy and hold for the long term. Number 2. Sabine Royalty Trust, SBR. Sabine is certainly the most unusual stock on this list, and this is due to a variety of factors. The first is its outstanding performance, which has seen it rise by 55% in just the previous 6 months alone as a result of increased energy prices. The second reason is that SBR is not a regular corporation with physical locations or products, but rather an investment vehicle that steadily sells off its core assets and returns profits to shareholders through royalties and interest. A huge network of energy fields spanning from Florida to New Mexico is being bled down by the Sabine Royalty Trust in this instance. As a result of its reliance on market pricing, the distributions of this monthly dividend stock, which is involved in the transportation of fossil fuel to market, can be quite volatile at times. However, given that oil prices are hovering above $110 per barrel and show no signs of slowing down, the dividends have been rather significant recently. Number 1. SLR Senior Investment Corporation, Sons. SLR Senior Investment is a business development company, or BDC, that focuses on helping companies grow. The company's primary investment focus is on privately held middle-market companies in the United States. The investment objective of the company is to maximize current income, while also preserving the value of the company's invested capital. Senior loans, including first lien and second lien debt instruments, provided to private middle-market companies whose debt is rated below investment grade, as well as other investments, are the primary means by which it aims to achieve its investment objective, both directly and indirectly. The fund may also make direct investments in debt and equity securities of publicly traded firms with a small number of shareholders, as well as in other equity and equity-related instruments, with no restriction on the amount of money invested or the size of the company's market capitalization. Additionally, it makes investments in overseas markets, particularly in emerging markets. SLR Capital Partners, LLC is in charge of the management of the company's investing activities. This type of stock makes investments in other companies in order to create monthly dividends from the returns on the cash invested. Sons generally invests in firms through first lien debt, in which it is the major lender, and thus has first dibs on assets if things go wrong, or even through unitranche arrangements, in which it is the only controller of all debt at a certain company, according to its website. Despite the fact that this methodology makes SLR Senior Investment extremely vulnerable to the problems of a single company, the company's overall portfolio, which includes more than 230 investments, is quite diversified. This permits the company to continue to prosper even if one or two of its investors encounter difficulties, and it also helps to support significant and consistent monthly dividends. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.